Welcome to Arthur Capital Ltd, your dedicated partner in ethical, non-interest investment management in Nigeria. Our mission is to empower Nigerians to achieve sustainable financial goals through transparent, professionally managed solutions fully compliant with Sharia principles. We offer specialized Shariah-compliant products, including our Sukuk-backed portfolio, real estate note, and Arthur Trade, designed for growth and stability. Our diverse investment vehicles provide competitive, risk-adjusted returns, ensuring your capital is managed with the highest ethical standards. Our real estate note offers a tailored opportunity to participate in Nigeria's growing property market through high-demand residential projects. At Arthur Capital, we combine deep expertise with a clear focus on financial inclusion, making ethical finance accessible to everyone. Start your journey with us today. Visit our office in Victoria Island, Lagos, or join us online at arthurgroup.org. Arthur Capital, your interest-free partner.
Our lives are filled with many defining moments. I remember when we lost our dad, our family breadwinner. Mummy tried, but could not afford to feed and send all four of us to school by herself. But just as we were running out of hope, someone from PAC Trustees called to tell us that Daddy had left some money in a PAC Trustees Educational Trust to cover our fees. Daddy, my hero. Of course, I made the most out of it and graduated with flying colours. Then I moved abroad to further my studies and work. Life was good in the UK, and I decided to send money back home to my cousin Chooks to help build Mum a house. With the help of PAC Trustees Diaspora Trust, I was able to monitor the purchasing of the land and build it without any hassle. This is me, Adora Eunice Obi, and I am building Africa's largest technology solution for virtual exhibitions. Building a dream can be hard, but with PAC Trustees Corporate Trust, I have access to sufficient capital from different lenders just by using our house as security. Life is defined by key moments. I have had no regrets in trusting my key moments to PAC Trustees Ltd.
At PAC, we understand that success is important, but legacy is what truly matters. Let us help you build a lasting legacy for generations to come.
Thank you all so much for taking the time to join us today. Now, when most people think about wealth, they think about earning more money, building businesses, acquiring assets, or increasing their income. These are important goals. However, experience has shown that building wealth is only one part of the equation. The more important questions are: how do we preserve wealth? How do we protect wealth? How do we transfer it responsibly? Now, these questions become even more important in a rapidly changing world where families are becoming more complex, investment choices are becoming more numerous, and the consequences of poor planning can be significant. This is where the principles of trust, transparency, accountability, and ethical finance become critical. Islamic finance offers a framework that is not only financially sound, but also value-driven. It places emphasis on stewardship, responsibility, fairness, real economic activity, and long-term value creation. So today's webinar, therefore, goes beyond finance. It's a conversation about legacy. It's a conversation about responsibility. It is a conversation about building structures that protect wealth, preserve family harmony, and create lasting impact across generations. We are privileged to have with us two distinguished experts who will share their insights on these important issues. We encourage you to take notes and make use of the question and answer sessions towards the end of this program. Thank you once again for joining us, and I look forward to a very enlightening discussion. All right, so I just wanted to set the tone for the webinar today. We'll move to the very first speaker of today, Mr. Ibrahim is the head of business development at PAC Trustees Ltd. and has extensive experience helping individuals, families, and institutions develop structures for wealth preservation, succession planning, and fiduciary administration. Today, he speaks on estate planning, wealth and trust structures, modern solutions for wealth preservation. All right. So, ladies and gentlemen, join me and welcome Mr. Abimbola Ibrahim.
Let me welcome all our participants to this webinar presentations, the trust, transparency, ethic, in redefining capital market through Islamic finance. That's the topic we are going to look at today. So please just relax and enjoy your day. We are going to look at these topics today, talking about the trust, transparency, ethics, redefining capital market through Islamic finance. So these are the some of the things we are discussing about today. Of course, the word Islamic finance is actually a financial system that actually founded on the principle of trust. When we say trust, it has to do with Islam language. They call it amana, trust. Then we begin to dwell to transparency, fairness, and ethical conduct. So unlike conventional finance, it emphasizes the connection between financial transactions and real economic activities while promoting social justice and responsible investment. So this principle has the potential to redefine capital market by fostering greater investor confidence, financial stability, and economic growth. So we are going to look at the roles of trust in capital market. First of all, we should believe that and have it in our mind that investors actually participate in capital market when they believe, one, the financial information is accurate. That is, there is no asymmetric information. The investors or stakeholders are able to know, the transactions, both the risk and the returns or reward that they are going to undertake. So this is one of the reasons why trust is actually important in non-interest finance. Then the market has to be fair to both the stakeholder. Then investment has to be managed responsibly. That is, there should be a much more of accountability. Then regulations are enforced consistently. Yes, we have the Shariah-Compliant, we have Security and Exchange Commissions that actually regulate the activities of trustee that are involved in any transactions within the capital market space. So coming to the Islamic financial trust through principles such as amana, I already said it, the trustworthiness. That is to say, the stakeholder are expected to actually act in the best interest of the trustee of financial institutions that participate in any transactions involved within the capital market space. They are expected to be, perform the activities to the best interest of the stakeholder. I said earlier, there should be an accountability involved in terms of transactions. Both the party has to fulfill their contractual obligations. When you agree that, okay, the sharing ratio for the profit is 60-40. So at the end of the, transactions, when the transaction is consummated, you expect the both parties to actually fulfill their obligations while you pay whoever deserves to have 60%, receive the 60%, then the investor that has to have is 40% are actually as 40% of their sharing profit. Due to the risk sharing, the Islamic finance is actually based on the faith base. So it's avoiding issue of riba, that is interest. So that is why the profit and loss sharing is actually fair and reducing exploitation between the two parties. So we are going to talk about the transparency now in terms of transactions involving all the parties on Islamic finance. So the access to the clear, complete information, I've already said about this, full disclosure of the risk and return, clear contractual terms and conditions, provision of excessive uncertainty, GARA, regular reporting and governance oversight. These are actually what's embedded in the transaction involving Islamic finance, which trustee are actually saddled with responsibility to ensure that the party are actually, lives to their obligations. So ethics as a driver of sustainability capital market. Yes, Islamic finance is actually based on the jobs and comply with ethics and social responsibilities standard. So Islamic finance prohibits transactions that have to maybe do with interest-based transactions, excessive speculation, investment in harms industry. Islamic finance is actually prohibit that, like gambling, alcohol, and unethical businesses as we are. So these are all what trust company are always, ensure that the party that are involved to ensure that they actual carry out their transactions in line with Islamic injunctions and Sharia compliance. Then it encourage social responsibility investing, asset-backed financing. We have a lot of structure as regard with that require asset-back. So trustee usually hold the title document on behalf of both the two parties, both the borrower and the lender in this case. Then it actually leads to the wealth creations, whereby we have a non-interest mutual fund where trustees actually play a major role here. Then we also have financial inclusion and equitable growth. Some of our Islamic faith religion, is actually increased and enhanced wider participation in capital market. The investors are actually have information about the market that are not hiding. There is bound to be confidence, for them to actually invest or participate more in the transaction in capital market. It's also promoting financial stability and discourage excessive leverage on speculation. So there's nothing like a speculation in the Islamic finance. It encourages sustainable investment that generate long-term economic value. Take, for instance, like Sukuk bonds that normally is used by the state government and federal government. Most of this proceeds of this bond is actually used to finance some of infrastructure projects like road, rail, transport, and all the rest. So these are all imparted into capital market. Improving corporate governance through accountability and Sharia compliance oversight. Yes, there is no any transactions that pass through capital market, through non-Islamic finance that not regulated by Sharia compliance. There is a Sharia compliance desk in the Security and Exchange Commissions that actually vet and scrutinize and review any transactions before it actually approve, be it a mutual fund, non-interest mutual fund, be it bond issuance, or be it any other transaction as may require. Then supporting inclusive growth by expanding access to ethic finance products. There was a report by Security and Exchange Commission DG in 2015 that non-interest finance contributed about 1.6 trillion up to 2025 including both bond issuance and non-mutual fund, and some other sub-Sahara compliance investment. So we can see that this huge amount of investment or fund in capital market is actually driven by the non-interest finance. So the role of trustee in all this, as discussed, is quite germane in terms of their responsibility and oversight, right from the non-interest mutual fund and even ditto private trust that offer the wealth management, estate planning. So the role of trustee in some of these transactions is quite germane in terms of their oversight functions, right from the monitoring and review and ensure that, take for instance, when we are talking about bond issuance, especially Sukuk bond, we expect that the trustees to ensure that all the necessary documentation is intact and all the filing as expected by the issuer is supposed to be filed with the Security and Exchange Commission and actually, reviewed by Shariah-Compliant test and before the transaction is consummated. Post-transactions approval, trustee ensure that the issuers are paying the bond holder as at when due, and trustee also ensure that all the necessary meetings is actually conducted. So coming down to mutual non-interest finance mutual fund, the role of trustee in that regard is to ensure that all the fund manager are actually all the asset classes align with the prescribed Sharia compliance and the trust deed of the transactions. Not only that, trustee will ensure that there is periodic, at least once in a quarter, that there is investment committee meetings that need to actually scrutinize, and assess the performance of the fund within a quarter, whether the fund is actually performing well, whether the cost is not actually, the cost incurred on the fund is no more than 3.5% required by the Security and Exchange Commissions. And there should be a periodic returns to SEC by fund manager. So these are all responsibility of trustee in the non-interest finance, mutual fund. Now let's come down to the estate planning and as we required by non-interest finance and the role of trustee in this regard. So we are talking about creating a living trust around the asset, which we call Wakaf. Wakaf is Islamic, we call it Islamic trust, whereby there is a give an instruction to a trust to actually manage your estate on your behalf. So it now means that all your assets, be it both liquid one and that is landed property or illiquid. The one in the bank, be it your account balance with banks, pensions, insurance, and stocks and others. So those are the responsibility of trustee in terms of area of a private trust. And we also look at maybe will creations. It is even expected of any Muslim, to actually have their eating their will on time. Inheritances is not fully decided by person, but it is by law, and compare with conventional will. But real Islamic will, it has already written. So there is no way you expect that the wasi, that is the person, the settlor, wasi, expect to actually, maybe decide to actually allocate certain percent of his asset, to distribute it after them, maybe 1/3 of the asset. And also, they are actually known that how those assets is actually going to be shared among the beneficiary after them is already written in accordance to Islamic injunctions. We expect that when a parent has maybe son and daughters, at least the son expect to have is 2 to 1. The son is supposed to have the 2% as more than daughters of 1%. So these are all what trustees are saddled with responsibility when it comes to the Islamic finance in capital market. So to cap it all, the Islamic finance actually have a lot of significant contributions to capital market in terms of enhancing confidence and transparency, in terms of deepening the market, in terms of the encourage all Muslims to participate in capital market transactions. Thank you all for listening.
Welcome to Arthur Capital Ltd, your dedicated partner in ethical, non-interest investment management in Nigeria. Our mission is to empower Nigerians to achieve sustainable financial goals through transparent, professionally managed solutions fully compliant with Sharia principles. We offer specialized Shariah-compliant products, including our Sukuk-backed portfolio, real estate note, and Arthur Trade, designed for growth and stability. Our diverse investment vehicles provide competitive, risk-adjusted returns, ensuring your capital is managed with the highest ethical standards. Our real estate note offers a tailored opportunity to participate in Nigeria's growing property market through high-demand residential projects. At Arthur Capital, we combine deep expertise with a clear focus on financial inclusion, making ethical finance accessible to everyone. Start your journey with us today. Visit our office in Victoria Island, Lagos, or join us online at arthurgroup.org. Arthur Capital, your interest-free partner.
Our lives are filled with many defining moments. I remember when we lost our dad, our family breadwinner. Mummy tried, but could not afford to feed and send all four of us to school by herself. But just as we were running out of hope, someone from PAC Trustees called to tell us that Daddy had left some money in a PAC Trustees Educational Trust to cover our fees. Daddy, my hero. Of course, I made the most out of it and graduated with flying colours. Then I moved abroad to further my studies and work. Life was good in the UK, and I decided to send money back home to my cousin Chooks to help build Mum a house. With the help of PAC Trustees Diaspora Trust, I was able to monitor the purchasing of the land and build it without any hassle. This is me, Adora Eunice Obi, and I am building Africa's largest technology solution for virtual exhibitions. Building a dream can be hard, but with PAC Trustees Corporate Trust, I have access to sufficient capital from different lenders just by using our house as security. Life is defined by key moments. I have had no regrets in trusting my key moments to PAC Trustees Ltd.
At PAC, we understand that success is important, but legacy is what truly matters. Let us help you build a lasting legacy for generations to come.
Thank you so much, Mr. Ibrahim. Thank you very much. This is deeply appreciated. Your presentation reminds us that wealth preservation should never be left to chance. Okay, so we move on to introduce our next speaker, Dr. Bashir Oshodi. Dr. Oshodi hardly needs any introduction within the non-interest finance space. Dr. Bashir Oshodi is a respected authority in Islamic finance and ethical investment with over 2 decades of experience spanning banking, investment management, academia, and financial advisory. He is the president of the Non-Interest Financial Institutions Association of Nigeria and the Group Chief Executive Officer of Arthur Group. Throughout his career, he has played a significant role in advancing non-interest finance and ethical investment solutions across Nigeria and Africa. So today, Dr. Oshodi speaks on building intergenerational wealth through ethical finance structure. So ladies and gentlemen, join me as we welcome Dr. Bashir Oshodi.
Okay, thank you very much, everyone. Good morning, everyone. Good morning, Mr. Itwa, Mr. Bimbola. Nice speaking with you. Okay, so we're going to keep it as short as possible, within 20 minutes. I'm going to be talking about, building, protecting, transferring wealth, right? I'm going to look at a few realities as much as possible. In other words, we'll try and keep things real, right? Without the theories of finance. I'll look at the pension market quickly. Assets. What assets should people go into, in a bid to protect wealth and transfer wealth? So we want to achieve two things there. We want to protect wealth, we want to transfer wealth, right? Two things. Right? So what do we have in the pension space? Yes, 30 trillion. What part of it do we have? Is it transferable in the future? We look at the asset management market. What asset classes should we explore? What asset classes? At what age? At 50, what asset class are you going to explore? At 65, what asset classes? As a corporate, what asset classes make sense to you? I was speaking to someone the other day. I said, hey, why do I want to invest in anything outside T-bills? T-bills will give me my profits upfront. The guy is in the 60s. So if I invest in T-bills in my 60s, I get more money than I make from real estate and from equities market, right? So at what age do you stop? I met somebody else at 80, still building new houses for his grandchildren. Is that the right thing to do at 80? Right? What return will you get? It's going to be for you or for your kids, right? So, generational wealth as sustainable wealth. How do we arrange or map out or structure our wealth in terms of generation and in terms of sustaining it and in terms of transferring it in a manner that adds to economic development, right? So again, I'm going to talk a lot about protection of wealth, protection and transfer of wealth, right? What is the best format to do this? I mean, we'll talk about this, the fact that, hey, you got 30 trillion, 30 trillion, 30 trillion naira in the pension space. I was speaking with a friend from one of the African countries. Wanted to do a commercial property after retiring. Even before retiring, was able to access his pension fund quickly, get facility from the bank. He put up a nice commercial property in Joburg, Johannesburg, South Africa a few years ago. Now, are we able to do these things? Can we really, really attract funds from our pension? How much of it can we attract? How much do we have in it? Is it growing? Have we put voluntary contribution in our pension when we have excess money? Or have we just traveled all over the world with the money? Which is something we like to do a lot, right? Have we just wasted the money? Spend a lot of it during Salah, and then we then get broke, right? How much money have we kept, so that when there are challenges, we can take out of it conveniently. You see, in Nigeria, right, with the devaluation of the naira, it means that our wealth has reduced. So, again, I was speaking with someone the other day. In 2012, whatever I was earning in dollar terms, it's probably far more than what I'm earning right now, right? And that applies to a lot of other people in dollar terms, right? So, in other words, as a country, our GDP has reduced because of devaluation, which is, government argues a good thing. It's a good thing, right? But we're going to talk about that as we go on. So on the one hand, the depreciation of your wealth, in dollar terms. On the other hand, is it sustainable to keep wealth in the portfolios that we have then? As we go on, I'll try and explain this further, right? Now, so these are the three things I want to achieve today. Building wealth, building it, protecting and transferring it. You see, there's an integral part of, if you like, the Islamic economic model beyond Islamic finance, which is what we call the Maqasid Sharia, the primary purpose of life, which is basically to live good lives, right? And I was arguing the other day that what they've done very well in Western economies is that they have perfectly integrated Christianity or the Christian values into the economy perfectly well. Because of that perfect integration of Christian values, into their overall lifestyle, without saying, oh, this is Christianity, right? What do I mean? Housing for all, right? Free healthcare, free education, except you want to take your kids to private schools, right? All those things, keeping to time, right? All those things are Christian values that were injected into the economy. So it became a perfect, a somewhat perfect system, right? If you commit a crime, you do certain things, the system even prevents you from doing it. Again, I was explaining also to someone in a program sometime that, hey, if everybody's got a house that is living in, got a property, you have a share of national wealth. And that share of national wealth makes you to behave in a manner that is good, right? Because everything is linked to your address, right? In the UK, in the US, Canada, everything is linked to your address. Your address is you, your life, and immediately you have that sense of belonging. You have your address. You don't want to go and hurt anybody. You don't want to make it. You're going to be found. You're going to find out where you are. All right. So, in other words, how do we build consistently? How much time do we know we're going to be able to build wealth? I have a friend, a close friend, plus or minus age mates. He's unable to build wealth anymore for one reason or the other. 10 years ago, a friend couldn't get a new job. 10 years ago, he couldn't build wealth anymore. 10 years ago, right? At what point do you think you stop building wealth, right? How much we're protecting it? At what point do you stop? Right? Yeah, Dangote can say, oh, we're doing a refinery, we're going to do another one, we're going to build more refineries in other African countries, somebody can say, hey, I've got the capacity, I've got access to cash. Because of this access, I'm going to be able to do a lot of things here and there. I'm going to make sure they're Shariah-compliant. Again, more recently, a client said, oh, no, at 65, I want to make sure that all my investments are Shariah-compliant. I don't want to do rebuy anymore, interest, right? Now, at what point do you stop building? At what point do you think you won't be able to build wealth anymore as an individual and even as a corporate, right? As an individual and as a corporate, at what point do you know the point, right? That your profession will become obsolete, or you yourself become obsolete. You have the inability at that point to build, to generate, to enhance wealth. Again, a very integral part of the Islamic economic model is the Maqasid Sharia. The Maqasid Sharia talks about the protection of 5 things. It protects self, life, intellect, prosperity, posterity rather, wealth, faith. You protect them, you enhance them, you transfer them, right? So on the one hand, the churches integrated perfectly well the norms of Christianity into the economy, and they achieved the sound Western economy, right? On the other hand, we see a detachment of, if you like, the broad Islamic economic model, right, in a manner that perfectly fits into overall, economic structure. Practically, theoretically it's fine. Theoretically it's fine. So what more do we use in building wealth? The first speaker talked about the concept and all of that, right? I want to stress more on the fact that how much savings do we have? You see, economic theory tells us about savings and investments, the way savings and investment can help you expand wealth, protect wealth, and make you a rich country and make you a rich person, right? In today's Africa, or particularly Nigeria is going to accommodate 50% of the poorest people, in 2050, right? By the end of the century, Nigeria is going to be the second largest populated country in the world, right? And so if that human capital is not translated effectively, in the case of China, right, where they've translated human capital into serious wealth, they can produce. The model of production is oversupply. You oversupply phones, you oversupply bottles, you oversupply pins. Because they oversupply, they crash global prices, right? Are we able to do that? Can a country like ours, and can people can organizations, can firms, Islamic finance, conventional finance, can we build wealth, right, on the back of the human resources that we have? As a company, savings and investment, looking at theories, economic theories, that we found out that they're not even applicable. They're not applicable in our own world because there's a detachment where people spend, I don't know, transportation alone, 40% of their income. How much more rent? What's left, right? So we found that in our own economies, in our own economy, people have been unable to save. Companies are unable to pile up funds. And so the ability to build wealth is then a challenge. And when you then build the wealth, you put it in an investment, you put it in a bond, you put it in a sukuk, you then realize that inflation is a termite. It acts as a termite that reduces the accumulation of that wealth. So I'll give you a typical example. You have $100,000, 100,000 naira in this case, or $1,000,000, and you put it in an investment, in a moderate investment, partnership investment, one of the non-interest banks, or even in the conventional bank, or even in the government bond, and you collect 15% per annum, right? I'm not going to go into the details of Islamic finance, right? 15% per annum. Inflation plus or minus the same thing right now, a little more than 15%. Effectively, your wealth reduces, your real wealth. If you put it in a corporate bond, which I'm going to talk about further, I think in the next few slides, if you want to exit early, depending on your status, you take haircut, huge haircut, about 25% haircut. There's a wealth. Are you building the wealth? Because you want to exit early, corporate bond and state bond, state sukuk. Both applies, either bond or sukuk because of the mark to market, right? But you want to put it in the federal government sukuk, right? The last 1 year is well priced, right? If your cost of fund, if the inflation is higher than your cost of fund, then of course you're losing wealth. And if, of course, FX, of course, I always talk about the fact that we have what we call predictable surprises. The surprise that will happen. The potential that FX will not be stable, potential is stabilizing now. The potential that there could be inflation, or there could be spikes, inflationary spikes from time to time as a result of election, as a result of global economic shocks and things like that, right? And the fact that if there can be personal shocks, loss of family members or integral part of the family, these shocks create either stagnation of wealth, reduction of wealth in some cases, and in some cases, elimination of wealth, complete elimination of wealth. So the point is, for these 3 dimensions of wealth, right? Whether you put in a moderable and a sukuk, as the case may be, how do you plan effectively so that at what point do you feel in your heart that I can no longer build wealth? You then start to protect the wealth. And then you then refer to our trust companies. At what point do you transfer the wealth? Is it when you're alive? A typical example, I'll give two cases. There's somebody, rich guy, worked in the banks, he had a nice property, living there, this family, in a place that looks like a Ikoyi, not necessarily in Nigeria. And then they give out the property. Sorry, they didn't give it out. He bought 2 other properties. He had 2 kids. Give the 2 kids, oh, you guys, I'm going to give you the key, the property now. Give them the property. And then, for whatever reason, there was a problem. They couldn't there was a separation. And then he lost everything. So he had built the wealth. He had protected it. He transferred it too early. Case number 1. Case number 2. You build the wealth, right? You build the wealth. You put them all in real estate, for example, and then behold, they're not paying you rent. You cannot get it. Something happens to you. You have life insurance. Insurance guys will tell you must have life insurance or life takaful. You have life takaful. You have an ailment that you couldn't solve, and you couldn't get enough cash to take care of it, and then you die, for example. Yes, you'll have built the wealth, you might have protected it. Yes, you'll be transferring it, but it's of no serious benefit to you. So why not critical illness? Why not have critical illness takaful in this case, right? Why not have a plan that when you retire, when you can no longer build or protect wealth, you can at least benefit from it, right? So these decisions are tough decisions to make at different times of our life, of our career, right? Again, the reason why I'm talking about all of this is the fact that At what point do trustees come in to help us manage our wealth affair? That's where I'm going. At what point do trust companies come in? Is it just when you're doing JV, you keep the title with the trustee, they keep your property for you or your title for you, you take a charge on the assets if it's a JV? It's beyond that. We're then looking at a case where we integrate, like I said in the beginning, looking at the way Christianity has been merged into society, right? We're looking at a case whereby we can protect the wealth of the man or the woman while she is alive, and for the family, right? At what point do you say, I can no longer build wealth? I want to transfer at some point, right? At what point do you say, I want to have wealth such that I can protect it, at least take care of myself, in case of critical illness, again, unforeseeable thing, I can still call it a predictable surprise, right? I mean, can you guys remember, or ladies, can you remember the point where maybe your parent got broke? Put up your hand if your parent ever got broke. At some point in life, parents get broke. Maybe their parents got broke when they're in secondary school, some in university, they just couldn't take care of the family anymore, right? Are they protected wealth enough? When they were accumulating the wealth, at what point did they say, hey, asset manager, advise me on the best portfolio? Because I want to be able to enjoy myself. I want to be able to transfer effectively, whether I have one wife or I have four wives, that's another story for another day, right? Again, for the trust companies, are they able to transfer to the families? If the Makosi talks about the fact that, he talks about posterity, right? Posterity is generation to come, right? You want to protect the generation to come. Are you able to transfer wealth to them in a manner that allows them to survive well? Or you're not able to do that, right? That is the role of non-interest fund managers and, of course, trustees. That is the role at this point. To say, how do we help you, right? To whether it's just one property you have or just cash flow or equities, at what point do you even sell your equities, right? Must you keep them forever? I remember in 2006, I was going to, for whatever reason, I was studying Islamic finance 2002, 2003, 2004. When I looked at my equities, personal equity investment, I said, these equities are not compliant. I mean, then you didn't have shares Islamic finance in Nigeria. By 2006, I sold all I recall that they had garage, they had speculation, they had interest in it, they had all sorts. And then what I did, I sold all my shares. At what point do you exit? Let's leave that. As a corporate, at what point do you think, election is around the corner, we've got a big portfolio? At what point do you look at your NVA, net present value, and say, if I start to take a loss of 2%, 3%, 5%, at what point do I exit? To protect the wealth. To protect the wealth. There's a rich man, I'll mention his name. He said, I'm going to put half of my wealth in New York. I'm sure you know him. He said, I'm going to put half of my wealth in New York because he wants to protect family wealth. Because he feels like, yes, it's good that the wealth is there, but he wants to take half of it to New York. Even though, of course, bulk of it is in Africa, right? Now, at what point, as a fund manager, do you say, my investment in Sukuk is getting too much, I can't even exit? Or my investment in the state Sukuk or a state bond is getting too much, I can't even trade with it. or even my PFA, I want to freeze PFA now. My investment, I'm retired. I don't want to take all the money. I want to leave it there. I want to push money into, certain investment that can give me better returns, right? So that ability to balance wealth, building it, balancing it, sustaining it, then becomes very important, right? Now I know I only have 20 minutes. I've spent about 10 minutes already, I guess. This is my most important slide, right? Fixed income, of course, non-interest fixed income, instruments, equities and other funds, right? Including private equity and real estate right in the middle. I talked about the fact that someone came recently and said, I'm in my 60s, I don't want to do real estate anymore because my highest return for every 100 million I invest is just 5%. I probably get 5 million for every property that I invest that is 100 million, right? So the guy feels if you invest 100 million somewhere in real estate, he gets 5%. That's 5 million per annum. If he invests the same 100 million in non-interest bond, he's probably going to get 15 to 18%. If you put in a commercial paper, it's going to get about 24%. You're like, hey, I mean, it's like 60s. I don't want to put, I want to get high returns. I don't want to build more houses. That's his position, clear position. Because he feels that, oh, when he retires, he wants to be able to, get what to take care of himself, to travel, live a good life, right? Where the state has not provided these conveniences, if you like, right? And so another investor says, okay, for me, I like to have a lot of, real estate in this case. I like to have them in just prime areas, right? In a bad case, I can do a reverse mortgage. That's not very common in Nigeria, reverse mortgage. Reverse mortgage is where you have your property, right? And then when you get old, it's very common in the UK, in the US. When you get old, you give it to an asset management company or a mortgage bank, and they'll be paying you salary from your mortgage, from your property. Because your property is yours already, they'll be paying you mortgages. They'll be paying you allowance, right? Until you die, right? If your wife is there, they'll keep paying your wife. So it will be diminishing the value of that asset. But when the asset, it doesn't have any more value, they can probably sell it and it becomes your will, if you like, or they give it to charity based on the will that the man puts together. In the case of those of a particular faith, let me put it that way, there's a defined structure to monitor will, right? You can only give out a maximum of a third of your wealth, right? Again, I was listening to Dangote the other day, and I was talking about his grandfather, Dantata, and I had invested, give out all his wealth when he was getting old. He was the richest man in Nigeria. He thought, I'm going to give out my wealth. I'm getting old. I don't want to account for anything, right? In the case of Dangote, they said, oh, in my own case, I'm going to have a foundation. I'm going to put the maximum of one third there. That's the maximum I can put. So at some point, people can take that decision and say, yes, a maximum of one third can be willed out, give it to charities, hospitals, schools, scholarship for students, and all of that, right? And that's why I want to have a real estate. Others will say, why should I put my 1 billion naira, my 100 million naira, or my 10 million naira into a 10-year fixed income instrument like a sukuk? It's for 10 years. And the man is 60 years old. At 70, he's going to get the money back. He doesn't know the state of his wealth. If he's 70 years old, he's going to put it in the sukuk. That's 10 years. If he wants to exit before maturity, it takes haircut. Doesn't want to put in a corporate sukuk, right? Corporate sukuk are usually shorter in Nigeria, 3-5 years. Secondary market is weak. You can hardly sell. If you're going to sell, you're going to take a big haircut, a very big haircut. Commercial paper, short, 1 year, fine. I said, do you know what? I'm in my 60s, I want to commercial paper. But the guy says, you know what? I like to support, let me move to the equity side. I want to support young guys, young people coming up great things. I've made the money already, right? This generational wealth, I want to put it in equities, right? On the one hand, I want to put it in private equity on the other hand, right? I want to support tech companies. I want to support, out of 10 tech companies, maybe 9 will die or 8 will die, only 1 or 2 will survive. But the guy wants to take that risk. But so it then means that, expensive funds cannot be put in equities. So people come to us and say, hey, I've got this, this nice deal. I want you to put some equity in it. I'm like, hey, this money is hot money. I can't put it here, right? So at what point do investors, either corporate or individuals, identify opportunities and put in equity in it? At what point? In your 30s, in your 40s, in your 50s, in your 90s? At what point? What expected returns do you think you're going to get? Does it help you to sustain wealth? Does it help you to protect wealth? Are you able to transfer it if something happens? So it means that the legal documents, so the lawyers have then become the most important part of all of these transactions, right? Are the documents, are the contracts firm enough? Let me keep it simple. Is the Mudaraba contract firm enough to allow transferability? Something we have thought about in the industry. As somebody has signed a Mudaraba contract, he's the owner of cash, he's a robo-mal, the owner of cash. He has invested it he has taken equity position in a water making company, right? Right? Israel doesn't know about the deal. He has done it in his private capacity, right? His children do not know about the deal. The man dies. Can you transfer it? Can trustees identify that part of his investment? There's a particular case where somebody died, and then by mistake they found a document showing that I had investment in a bank, millions of naira. They didn't know about the bank account. The wife did not know, the kids did not know about it. So again, it then becomes important that when you have liquid investments beyond real estate that everybody can see, even in the case of real estate, the wife may not even know about all of them, right? Do you have liquid investments that are transferable? Are trustees able to apply the formula stated, particularly in the Quran in this case, stated in the Quran, there's a formula there that shows how well, law of succession, right? That shows how well should be distributed. Are the trustee companies able, at this point, are they able to transfer these less or more liquid assets to posterity, to the generation to come, or to children, or to family, as the case may be, right? So these investment opportunities become very important at the age you're taking those decisions. And as a company too. Now, as a company, how much of it do you want to play around with, right? Are you going to put 50% of money in private placement, knowing very well that most of it can evaporate? And that's the word, can evaporate. I go put a bulk of it in equities, in REITs. REITs compared to all share index may not be fantastic at this point, except maybe I know there's a fantastic case in Nigeria right now, a fair case that is quite competitive, right? However, are you going to encumber all your assets to expand business? What I mean by that is you put your assets as collateral, you encumber them, and then you build more, you invest in more, you get more facilities or loans or or even Ijara facility, whatever facility you get, you encumber your assets, right? At what point do you exit from that? So these are roles that fund management companies and trustee companies must play beyond, hey, come on, invest, you need to invest 100 million right now. I'm going to keep it for you for 6 months or 180 days or whatever. You're going to get this much returns. And then you don't have further discussion around how best to transfer, to protect and to transfer. I'm not going to go into the bigger picture of Nigeria economy. Sorry, the call coming in. Sorry, I've been thrown out. I'm going to try and finish up in the next 5 minutes, very quickly. I'm just trying to get back to my slide. Where is it? Okay, am I still there? Okay, so if you can see my slide, I just got thrown out. So let me try and round up. At what point do you share your so 1 second. Yeah. Share. Okay, I can't find my slide anymore. Because I can let me share my slide is possible. So at what point do you stop investment? Right? At what point do you freeze your investment portfolio?
I can see your screen, sir.
Oh, okay. Let me just see.
We can see your screen, Dr.
Let me see. I can see my screen. Okay, I see my screen. Okay, fantastic. Okay, I can see my screen. There's a call that came and I got thrown out. Okay, let me use another source. Yeah, 1 second. Okay, so let me just continue. Now, let me just summarize let me summarize by saying that the best way to then deal is to sit with a fund manager, right? And get into the best option. You look at a pension fund, how much you've got there. Look at taking bites or pieces of interest. By interest, I'm not talking about interest. I'm talking about taking position in different portfolios and knowing what the advantages and disadvantages of these portfolios are. As good as sorry, I got thrown out again. As good as equity investments are, or as good as Mudaraba are, they can be very interesting, right? Sorry, I got thrown out again. So as good as equity, so I must confess, when you do equity investment, Mudaraba and Musharaka, they're very risky, right? So you need to be sure of the best time to exit, right? And how much investment you're putting there globally. No interest banks don't do more than 5% of their investment in Mudaraba and Musharaka. In the case of Ijara or Muraba, fair enough, they try to do a little bit more because you're transferring the risk, right? So if you're investing in a portfolio and there's a fixed markup, actually commercial papers, usually murabas, right? Because of the fixed markup, of course, there's a guarantee somewhere, it makes it fair. When investing in Sukuk is long term, it comes with its own unique risk, right? So we need to be able to match long-term and short-term investments as much as depending on your age. So the role of the investor or the investment manager is to advise you appropriately on your best options. Let me try and round up. Talk about this. I talked about this already. Yeah. Sometimes you can also explore. If it's convenient, certain level of foreign investments, right? Or investment in, maybe buy shares, compliant shares, of course, equities that are compliant. You can consider buying them, right? But of course, again, when you buy them, you need to be conscious of the time you're going to exit. The question I'm going to ask is a Tesla Sharia compliant, right? Does it meet the criteria of being Sharia compliant, right? The debt that Tesla has, the debt is total market cap or total assets, does it meet the Sharia ratio of 33%? If it does, why not? Facebook, is it compliant? Is that debt much more or is that debt manageable? Does it meet it, right? So sometimes, especially for those who have got potential, they've got kids abroad, or they want to send them abroad at some point, right? I always advise them to have, assets here and there, so that when their income drops in Nigeria, they can potentially use a UK property or a US property or a property in Dubai they can get proper income from it to take care of their kids, so they won't have to be in problems. So again, lastly, tokenization. Tokenization allows us, it's not really been explored appropriately in Nigeria, but it allows us to digitize to the smallest bits a lot of our assets. And then you have an asset size of, for example, 500 million. You want to take a quick equity release from your asset class or your portfolio, equity release, you need 20 million quickly. Are you going to take a facility? Or are you going to take from your tokenized assets? Are you going to sell part of your tokenized assets, right? I'm going to stop there. So I can take questions. I think I've spent a little beyond my time. I'll just pass it on to Mr. Itwa for questions, so I don't go far beyond my time.
One of the key messages I have taken away from your presentation is the fact that wealth creation is alone is not enough. Sustainable wealth requires intentional structures, disciplined planning, and a commitment to stewardship across generations. There are questions in the chat section. Let me try and read them out. Yeah. There's an anonymous attendee who asks, how can we determine the percentage of return we should earn to hedge our income against inflation?
Okay, thank you very much. So I have again, it depends on your age. I give an example of somebody that is in the 60s. I don't want 5% of my investment. 5% or 5% is too small for me. I want 20%, right? So for that person, I want 20%. He has enough properties, not building houses anymore, it's fine. But for somebody in his 20s, 30s, 40s, that person still needs to generate real estate assets, right? So that there can then be a time, right? Now, I learned in the real estate space that it gives you a good edge against inflation, right? Somebody in the 60s can argue otherwise and say, no, this doesn't make sense, right? Can you imagine you have real estate in the prime area, particularly the commercial area? Whichever way, you always get good rents. The rent is going to be more than that 5%. In the case of the gentleman that says, hey, I'm in my 60s, I don't want to do this anymore, right? But for younger people, it's an opportunity to acquire. You need to acquire to an extent where you're going to be living, 1 or 2 or 3 or 4 or 10 for investment, right? So that can give you an edge. At some point, you can always then exit in bits. You can just exit 1 or 2, then put in maybe Sukuk or more liquid investment that can give you return. So you need to combine that. You cannot just have real estate. You need to then say, okay, I have 10, I have 5, I have 3. I want to get rid of 1 now and put the money in more liquid investment so I can be getting fixed return, right? To take care of my lifestyle, right? So the question is, at what point? I think at that point is at the point where you think you can no longer build assets. So at the point where you can build assets, I will encourage a lot of real estate. At the point where you can build real assets, where you're working, you're going to work, collecting salary, you can build your assets. But at the time when you can no longer build assets, God forbid, bad thing, illness, you don't have a job anymore, you can't get a job or whatever, at that point, you then start to protect your wealth. Whatever you have, you protect it. You can then diversify so that it's easy to get for yourself and, of course, be able to transfer in the future. I don't know if I answer your question well, but it's a function of everything, is a function of time and age. Again, an asset management company, a trustee company should be able to advise you on how best to manage your wealth based on your age and your source of cash flow at that point in time. Yeah. I'll take the next question.
Thank you, Dr. Shea. Mustafa Abubakar is asking, tell us more about Sharia screening of equities. I can see a lot happening elsewhere. I don't know if that question is clear, but that's all.
Very quickly. Yeah. So very quickly, there are two major levels of screening, equities. The first one is industry screen. You take away tobacco, take away alcohol, take away financial institutions, interest-bearing financial institutions, take away gambling. When you take away those ones, end of story. That's fantastic. The next phase is then you have then identified this company. They make bottles, they make water. That's what they produce, water, right? Water is compliant, it's compliant. However, that company that makes bottled water, however, they have asset, their total asset is 1 billion naira, their total asset, all their investment, their total asset is 1 billion naira. Out of that 1 billion naira, they have borrowed 40% of it, or they borrowed 400 million from a conventional bank to do their business. It becomes non-compliant, even though they make water. And that's because they borrow more than 33% of their total assets from a conventional bank. Or that company, from the money they've made by selling water, they have invested more than 33% of their more than 30% of their more than 33% of their investment is in conventional bond, or in a bank, interest-based term deposits, or any investment that is not Sharia compliant. Now, where is more than 33% of the size of their capital, their total assets, or their market cap, it means they're not compliant anymore. Or in fact, that company that is making water, they decide to be doing a bit of alcohol, a bit of it. They make 5% of that income from selling nice shots. I don't drink, so I don't know whether it's nice or not. They sell shots, right? That shot can intoxicate you. If that income they make from that shot, that little alcohol they produce, is 5% of their total revenue, is fine. If it's more than 5%, it's not allowed. So just to give you a feel of the fact that the company can look compliant, they're making water, they look compliant, but because of their financial ratios, right, they can be non-compliant. Just to answer that question. I'll take the next question.
Okay, all right, thank you. This is for Dr. Oshodi. How can one practically integrate retirement or pension fund into real estate plan?
Okay, so pension fund, so a while ago, I was in the bank, and then one of our colleagues wanted to buy a property, and he said he was going to use his, money from his PFA as equity to buy the property. We got the property for him, the staff of the bank. We got the property. He moved in. We couldn't get that money from the PFA. We couldn't get it. That was years ago. That was about 8 years ago. Now, I want to believe that some of those bottlenecks have been sorted out. You can take from your pension. I want to believe it's now a lot easier. I'm not taking out of mine, right? But if that is allowed, you should also be able to go to a bank and say, in my pension, I've got 100 million, I've got 50 million, I've got 10 million, whatever. I want to use it to buy a house to live in. I want to get the money from, from mortgage bank. I want to get some from MREF or something. You should not be able to do that. I believe the process is a lot easier now. But more recently, I've not seen it happen. More recently, maybe because I'm not so much into the mortgage system as such, right? But I want to believe that the PFAs should ordinarily release a certain portion of your investment, of your pension, where you want to buy real estate. Yeah, to the best of my knowledge. Yeah.
Okay, the next question, Dr. Oshodi. How is from Mohammed Idris. How and where do I invest my USD staying in the bank doing nothing? And I have kids studying abroad.
Okay, so the truth is, I'm going to give a personal advice. It's personal. So if you invest USD in Nigeria in any of the non-interest banks, yeah, it gives you some return, maybe not a lot. If you invest it in the banks even abroad, yeah, it gives you some return, also very small, even smaller than Nigeria. So for me, the best option will be to put it in an investment first. When it gets to a stage where you can buy a property, just buy the property. But the property will always appreciate abroad. And don't forget to be rent. So I did a scenario, of a 100,000 pound property in the UK. And I realized that Kent is outside London, right? 100,000 pounds. Now, that property gives 10% return on investment. If you take 100,000 to Victoria Line, cannot buy a property, 100,000 pounds, that's 200 million naira. You struggle to buy a two-bed in Onero, or struggle to buy a two-bed even in Lekki One. So and of course, your rent in Lekki One will probably be 100 million naira house, maybe 4 million naira. So in other words, I discovered that the return on investment, if you buy 100,000 naira pound worth of property in Kent, for example, or Midland in the UK, and your return on investment is 10%, is better than when you buy it on the island. I mean, the money don't even buy a property on the island. So for those with kids or kids that are going to uni or something, it's better to just tie it down in such assets so that the rent can then be used to take care of kids. Of course, in the case of the US, it's not every state that is viable, just like Nigeria. You cannot go and buy in some far states or in a village and think that you get return. You have to buy in a place close to the university. So students at least will rent it. They will always pay. Students will always pay. They pay for 1 year.
All right.
Or something like that. Or close to commercial centers where it will be taken up. Yeah.
Thank you. Thank you, Dr. Shuli. This is from an anonymous attendee. There's no name here. Good morning, everyone. Thank you for this webinar. My question goes to Dr. Oshodi. My question is for younger generation just coming up that grew from a poor background, just setting pace for themselves. How do you think they can build generational wealth? That's the question.
Okay, yeah, thanks. One of the things, I mean, I had to put on my phone. I mean, my phone is a new phone, so it's not an old one. And then over the weekend, my brother's son, who's 50 years old, I gave it to him. I said, fix this phone for me. I don't know what's wrong with it. I gave it to him, and in 5 minutes, he has fixed the phone. He's not a technician. In 5 minutes, the phone, he said, he gave it back to me. I said, oh, I've done it. And really, he's done it quickly, very quickly, 5 minutes. Now, what I'm saying that is because we found out that the new generation, they've absorbed, technology so well that they can create anything. Again, this week, somebody came to me and said, his son created this particular app. No, it's not even an app, it's a platform. I said, please let him come around, let's talk. Now, that thing the guy has created, he created from the comfort of his room. He doesn't even know what to do with it. And I've said, come, let's talk. We're going to work out something. Now, I think that every time, young people should have propositions on their WhatsApp ready to be shared or explained. In the process, you're going to find an equity investor that will help you. I mean, of course, even Zuckerberg got his first $500,000. As a university boy, he created what became Facebook. We did yearbook. We forgot to create Facebook. We did yearbook when we were in school. He created whatever was Facebook now. And somebody said, I like this. Let's like go around your university just for his mate and then for the university. And somebody put in $500,000. That's where it started. Now, everybody must have a proposition or two or three they are marketing with where somebody can invest and help you expand that business. Right? That's the first step. So immediately able to then get investors. Again, you don't need 100% of that investment. What matters is for it to grow. Even if you're having 10 or 20% over time, let it grow. So other people can put in money, help you expand it, and then start to generate wealth. You must generate wealth before you can even protect, before you can then transfer. Right? But that ability to generate then becomes very important. Yeah.
Thank you. The next question is, aside the fact that we're not allowed to invest in equity attached to Gara or Riba entertainment, What other things should we look out for to say an equity Islamic compliant? I'm not sure if that question is clear, right?
I think it's quite clear. So basically, I guess the question is around Sharia compliant equities. So you have the NGX Lotus Halal Index. We have embedded that index into our Islamic Finance Market Index, right? That index allows you to see the performance of Sharia compliant equities against all share index, right? And other investments that you have, investment in banks, investment in corporate sukuk, private sukuk, all of these, instruments. So you can actually, so this is available. So again, I may not start to mention the names of companies that are compliant, but if you go to this index, you're going to see the companies that are compliant. So out of all the screen, you then realize that some companies, the universe is not much, the number of companies is few, but they are compliant and they are available for investment. Their equities, they don't have to be a bank or Islamic bank, but they are regular companies. They've met that financial ratio I talked about. And because they've met it, you can invest in them. Again, we can advise you on that. Yeah, baby.
Thank you. Good afternoon. My question is directed at Dr. Oshu. Number one, is wealth building possible at every level? Number two, is the barrier to building wealth a mental or economic barrier in reality? Number three, at what stage is wealth building advised, since there is a point where wealth building is not possible? Is that question clear, Dr. Oshu?
Okay, so I'll just try and answer them all together. I'm not sure I got all the questions well. If I miss anyone, I can take it. So there's at what point is well building, at what point do you start? You see, you must start with the consciousness of well building. That consciousness means that every time you get cash, again, I think about the people that got Nobel Prizes on the back of talking about savings and investments. In as much as we are able to save in this part of the world, must be conscious of the fact that we can actually immediately are conscious of it. When opportunities come, we identify them. If you're not conscious of well building, if the opportunity comes, you're not going to identify. Again, I'm going to go back to Dangote. Dangote at 21, his uncle, his father died much earlier in the day, he was 6. Went to his uncle and said, Uncle, can you give me a loan? I want to go and start selling cement and sugar. And the uncle gave him a loan at 21. He came to Lagos, started trading. Now, he was conscious of business, of the fact that he needed to generate wealth. He was conscious of the fact that he needed to borrow. And that's why I said savings and investments, you may save forever. You save until you're 100. You can't still do business, right? But it's good to have savings and investment. But immediately you have the opportunity to access facility. It's a great thing. It's not a bad thing. Some people don't want to borrow, but immediately you can access that opportunity. You can start building wealth, right? And as you build wealth early enough, you then start to know the ones you have comparative advantage in, the one you can do better. The one you cannot do well, even Dangote sold one or two companies. No, this one I don't think I like anymore. I want to do this one because I think I have better advantage here, right? So at what point? That point is now. The time you become conscious of the reality that, hey, there's an opportunity. Yoruba people will say that is what you look for that you find. I don't want to speak Yoruba now, right? It's what you look for. When you find it, you get it. If you don't find it, you don't get it. If you want an equity investor in your business, you must look for it. If you don't get it on the way, you get it in year 2 or year 5 or even year 10, but you get it at some point. The bad thing is to stop looking for it. I'm going to quote about Einstein in one of his write-ups. He said, you should keep moving. According to about Einstein, his own is that when you're riding a bicycle, never allow the bicycle to stop. It's not about the speed of riding the bicycle. It's the fact that you're moving, right? So you must always move. I don't know if I covered your question. We have answered it. The best time is now.
I think you've tried.
Yeah.
Thank you so much. There's someone that's asking us to share the slides with him. All right, Bukola, you can handle that later, okay?
Yeah.
But you will need to have the email address.
Yes, I will.
You have the email addresses so they can share them? You do,
Yes,
right?
I have the email address. I have the email address.
All right. There's another question. I also want to ask if inflation in Nigeria is about 16 and I invest in a sukuk that promises over 20, would you say that is a good investment? Or are there other factors we should consider?
Apologies. Can you take the question again? Just breaking. I missed part of it. Just come again, please.
He said, someone is saying, I also want to ask if inflation in Nigeria is about 16% and I invest in a sukuk that promises 20, would you say that is a good investment? Or are there other factors we should consider? I'm referring to liquid or cash investments here.
I'll say it's a good investment. Again, I'll say it's a good investment. Again, just like I mentioned earlier on, if you are 65 years old, invest in the 10 years to cook. Then maybe at that point it's a bad investment, right? Maybe invest in shorter term instruments, like commercial papers or shorter terms to cook. Because you're 65 years old. Yeah, but yeah, if you're a corporate, that's fine. If you're a corporate, you can trade it. It's tradable, easily tradable. So generally, I'll say it's a good investment. Generally, depending on your status.
All right. So let's take the two last questions together. What proportion of one's investment and wealth building should be equity investment in startups? How big is this opportunity in Nigeria? That's the last question here. All right.
Okay, so it depends. Are you asking that question as an individual or a corporate or a bank or a formal company? So different answers for different category of people, right? If you're an individual, and that question is coming as an individual, the truth is that, I mean, I was in Alaro City the other day, and they were telling us those that invest in Alaro City, they use generational wealth. It's money they have made after doing business. So that money just brought to Nigeria and said, you know what, let's sustain our wealth in this new free trade zone, right? They've made the money already. If the money is debt from the bank, right? You cannot use it, you cannot use equity except profits. If it's profits that you have made, if you like, you can take all your profit and put in equities if you think you can take that risk. If your heart is strong enough to take the risk. Now, I mean, as people get older, they take less risk, So when you get older, you'll be like, no way, I'm going to reduce my risk level. But when you're much younger, you can as well say, you know what, I've made 100 million from this business. I want to put everything in. Of course, I would advise you not to do that. I advise you to balance. So back to your question, I think it's just a personal opinion. You've made profit, you made 100 naira profit, 100 million, whatever. What part of it should you put in equity? I think you should put, I would say no more than 30%. Being conscious of the fact that the possibility of success of that equity position you're taking, the probability of success is 10 to 20%. And that's the truth. Locally, globally. Even Silicon Valley. It's not the money, it's not only the good names that are coming out. In Silicon Valley, people invested. That's 10 to 9% of investments evaporate very easily. So on the back of that, I think except it's generational wealth. Even generational wealth, you want to secure part of it, in fixed return investment. You want to only risk a certain portion of it. Of course, if you are risking, you then be sure that the party you are risking with, they are reasonable people. They have character, enough character that will allow the business to grow. Enough character that will not allow lifestyle to take away all the money, all the investment. Yeah.
Thank you, Dr. Oshiri. Thank you so much. This has been a very interesting session. Before we conclude, allow me to briefly highlight 3 important lessons from today's discussion. First, wealth creation and wealth preservation are not the same thing. Building wealth requires effort, but preserving wealth requires structure. Second, ethical finance is not simply about compliance. It's about aligning financial decisions with values, responsibility, transparency, and long-term sustainability. Number 3, intergenerational wealth does not happen accidentally. It requires intentional planning, appropriate investment structures, effective estate planning, and sound governance arrangement. These lessons are relevant to individuals, families, to business owners, and institutions alike. Before I give my closing remarks to end this session, I'd like Mr. Ibrahim to make his final remarks, just in a minute or two.
Okay, thank you. Thank you, the attendees. I think from what we heard today, from the speaker, Mr. Dr. Shodi, and likewise I think it's an eye opener as regard with how we can build our wealth, how we can preserve it, protect it, and transfer it. So it is very important, like one of the questions which is germane that Dr. Shodi said here, when does the trustee supposed to even come in, whereby they have to start, start to preserve or transfer those wealth after you have accumulated it. In fact, it's not, it's something that whoever that's listening today, I don't know of your age, that you can actually start right now, right? One thing, the features of trust is that even as a student, of course, you are supposed to have a beneficiary, right? Maybe you have, you can actually access PAC Trustee Educational Trust, whereby you started making provisions, right? Maybe for your future in terms of your career aspirations, or maybe after your university you want to travel out, or immediately you gain employment with Authors Group, you have started even create a target trust. This is a part of you're building up your wealth, and you are thinking of how to transfer it, because definitely if you sign up that product with PAC Trustee, you are going to name a beneficiary, and those beneficiaries automatically become accessible to your wealth immediately. Right. Maybe something happened. Thank you.
Thank you, Mr. Ibrahim. Thank you so much. Does Dr. Should have any final words or comments?
Yeah, nothing much. Just that consciousness. That consciousness must be reawoken. If it's not awake yet, right? You must be conscious of the fact that these are realities, and you must be able to play chess in your mind and say, what is happening, what's going to happen next. So again, for me, the final word is consciousness. Consciousness in terms of generating the wealth, of protecting it, and of course, of transferring it. Thanks.
All right. Thank you very much. As we bring this session to a close, I would like to express our sincere and profound appreciation to our distinguished speakers, Dr. Bashir Shuri and Mr. Bimbola Ibrahim, for generously sharing their knowledge and experience with us today. I would also like to thank our partners at PAC Trustees Ltd for their effort in organizing this webinar. Most importantly, we want to thank every participant who joined us today. We hope this conversation has only increased our awareness and has inspired action. I think on another note, at some point, we probably need to do another webinar where we'll deal with issues around family office. Dr. Shiri, right?
Oh, correct. Yeah, that's very important.
That's okay.
Yeah, I think we can do that at some point. The true value of today's discussion will not be measured by what we heard, but by the steps we take afterwards to better structure our investments, preserve our wealth, protect our families, and build lasting legacies. Thank you for your participation today. We wish you continued success and look forward to engaging with you again in future programs. God bless you. God bless all of you, and have a truly, truly wonderful day. Thank you all so very much. Thank you.
Welcome to Arthur Capital Ltd, your dedicated partner in ethical, non-interest investment management in Nigeria. Our mission is to empower Nigerians to achieve sustainable financial goals through transparent, professionally managed solutions fully compliant with Sharia principles. We offer specialized Shariah-Compliant products, including our Sukuk-backed portfolio, real estate note, and Arthur Trade, designed for growth and stability. Our diverse investment vehicles provide competitive, risk-adjusted returns, ensuring your capital is managed with the highest ethical standards. Our real estate note offers a tailored opportunity to participate in Nigeria's growing property market through high-demand residential projects. At Arthur Capital, we combine deep expertise with a clear focus on financial inclusion, making ethical finance accessible to everyone. Start your journey with us today. Visit our office in Victoria Island, Lagos, or join us online at arthurgroup.org. Arthur Capital, your interest-free partner.
Our lives are filled with many defining moments. I remember when we lost our dad, our family breadwinner. Mummy tried but could not afford to feed and send all 4 of us to school by herself. But just as we were running out of hope, someone from PAC Trustees called to tell us that Daddy had left some money in a PAC Trustees Educational Trust to cover our fees. Daddy, my hero. Of course, I made the most out of it and graduated with flying colours. Then I moved abroad to further my studies and work. Life was good in the UK, and I decided to send money back home to my cousin Chooks to help build Mum a house. With the help of PAC Trustees Diaspora Trust, I was able to monitor the purchasing of the land and build it without any hassle. This is me, Adora Eunice Obi, and I am building Africa's largest technology solution for virtual exhibitions. Building a dream can be hard, but with PAC Trustees Corporate Trust, I have access to sufficient capital from different lenders just by using our house as security. Life is defined by key moments. I have had no regrets in trusting my key moments to PAC Trustees Ltd.
At PAC, we understand that success is important, but legacy is what truly matters. Let us help you build a lasting legacy for generations to come.